Welcome back everybody into another daily recap and also the last day of the month. So we're going to do the recap of the month as per my trading wise. So as you can see here, this last month was 0.5% loss. Of course, I'm a beginner, but from a couple of weird trades in January, that's from the 20th of February up to now, that's when I'm actually started trading full time every day, and still of course is missing today, but the overall result, as you can see here, is actually a 1% loss. So starting balance 987, 997, okay, and then closing balance 977. So monthly actually of 1%, just at $10. Because I'm using very small lot size, and yeah, we can do a quick analysis. Of course, it's the first month and it's all experience that I'm doing, so we can have a look at it. So of course I have still a good thing is that I have a 43% win rate, which would not be bad if the RR was not that low. 43% if the RR would have been at least, wait for it, would have been at least 2 to 1, then that would have been profitable. But since the average win is still lower than the average loss, in this case, only a 43% would not be okay. In this case, if I had a 1-to-1 risk to reward, then I will need a higher than 50% win rate. Remember that this is the first month, so it is absolutely normal that I will just take stupid trades like I did. As you can see, I'm mainly focusing on gold, a couple of scalps on Euro USD today, and one of the first day of February, and we are ended up closing with minus 1%, but that's absolutely still good. The only thing is, okay, what I really need to focus on is mainly this one. These were my trade ideas for the day, so I was looking mainly for sells up until proven wrong, and we can see, we can go back to the start of the New York session. Okay, so I missed this entry. You can see here, this is my PSA, first PSA for the sells over here. So that was my first PSA, but I missed the entry because the volume and we were in this order block. You can see it from here. We were in this order block, so I was not really liking entering a sells over here because we were not into a trend. This was not a liquidity grab and then for the continuation bearish. This was just being into a range and then possibly taking this trade. That doesn't really make any sense. Yes, the price sensitivity area was that one, but the idea was not really that. So when I saw the price action, stronger bearish candle, closing below my PSA of interest, what I did was placing a sell stop, below the PPL. What actually happened is that the sell stop got activated. This is a sell stop. Got activated, but then the price action didn't have any continuation on the bullish side. Not even, probably if I had to manage the trade, if I didn't see any rejection over here, so I don't see a following bearish continuation, or I don't see rejection at this level as per scalping. That's the price action that I would love to see even after this bullish pullback. I should take a minor loss over here instead of taking the full loss over there. What actually happened next is that I sort of, I don't know, on the bearish side, still wanted to take advantage of the sells, blah, blah, blah. I saw this candle closing. Look at how small that is and how a single candle confirmation this is. I saw that this was the 75% retracement of this overall bearish move, and I took the sell at the lows, of course, and just the stop loss was up here for 15 pips, and I got out at above the previous PSA. Stupid entering, because there's essentially, we are still, what the only problem is not that I'm taking entries or sells, is because we are still in this order block. We are not having stronger confirmation and then a pullback and then an engulfing bearish one to take advantage of the bearish move. I'm just placing a sell stop and buying randomly in the middle of the range. So that's something that I'm not proud of. That's because, I mean, with this, I am completely not in the mood and mindset to take advantage and understand the shift of bias. I actually understand the shift of bias, but I failed to enter. I failed multiple times. As you can see, my buy, if you remember my trade idea, is buys above 1812.5 if we see a clear-cut break above. And as you can see here, we have a clear-cut break above, a retest, and that would have been my first entry. Should have been at this candle, bearish candle closing like it is, like put 15 pips. This would be even a very small 5-7 pips just to reach this previous, even this previous size is still a 2-to-1 risk to reward. This is a 3-to-1 risk to reward. But that was my first idea. And what actually can happen is that I switch into sells completely unnecessarily. My own bias should be buys right now because of what I saw. As you can see, the buy above 1812.5, I don't have any sell plan. That's because the price action is so bullish. But what I identify a double top over here. So that's when I enter sells in the middle of the range. If that was a pre-planned analysis, then I would have entered sell over here at the candle close. But since it was not pre-planned, it was actually a rushed entry, this sell was so bad. And I saw this, then it went like 10 pips into my direction, but then got stopped out at break even because I think my entry was above there. So it's not a loss, it's a break even trade. Yeah, retest of the main idea. If you see, we are retesting now the same lows. This is a PSA that I was chatted up because of these previous highs on the left hand side. As you can see, that's where the price action was. So my PSA was this one, and when we had the retest, but I was still in my previous trade, that's where I should have changed and shift my bias. I should have never switched into a sell bias, first of all, and so then to be able to take advantage of the buys as per pre-plan analysis. So what we see is that, okay, clear bounce. Now we are making a higher low because we break above. What is happening? I'm not shifting into sells. When I see this candle closing after New York Stock Exchange opening, closing like this, bearish but with a huge liquidity grab, that's where I took a buy, and that's where I closed it at the PPL for I think around 8 pips, and that was the only winning trade of today. At least it was in the right bias, taking advantage of the dollar weakness. And then what you identify is that, okay, this was the last impulsive move. So we have this bullish move. What we identify is a 75% correction. This one was seen live. This rejection here and this pullback, mainly what I saw, what I identified was this very candle, this red one, like it happened here, that's where I entered, not like it happened here, sorry, that's where I entered, This is a very nice liquidity grab where I could have entered immediately over here. Nice stop loss below the previous candle wick, and then impulsive move on the upside. And you can see that it's still actually matching a nice 75% retracement. After that, price makes a new low, a new high, and what we see is that same price action is happening. PPL, previous support, candle closing. That's where I could have taken my first further scalp entry. Then price goes, and now we have a very pure consumer confidence. So of course it's very bullish on gold and bad for USD. I missed this entry, but mainly look at this. Okay, look at this bullish price action after the consumer confidence, and look at this retracement down. Let me just do it like this. Bullish upside move, bearish correction, ending exactly at 75% retrace, 61.8 retracement and PPL. I could have taken an entry to the previous highs on the left hand side, and that's absolutely perfect. It would be a very good risk to reward, almost a 3-to-1. Then again, from this bullish move, because we made a new higher high. So since we made a new higher high, that's where we can retest the retracement of this move. And again, 50%. Now in this case, we touch 61.8, but these candle bodies all are closing at 50%. We can see how this liquidity was grabbed, and then the very next one didn't need any lower wick to go back up, because the liquidity was already grabbed by the previous one. Same happening here, same story. Still, we didn't make a new we make a new higher high. This is not a relevant PSA, it's not a relevant pullback, and that's where we can identify a 75% retracement. As you can see here, this is the impulsive move, this is the bearish move, bearish correction down at a 75% retracement, and then the price continues bullish. As you can see, also breaks up. So what we could do now, as per back testing, okay, this is the last impulsive move. Let's see, what are we touching here? Yes, we are basically touching the 50% retracement to go back for like 20 pips. But yes, this is a price action happening today. Today I took a few losses, 2 losses and 1 break even, and 1 very small win, because I was trading this part of the range while I was not able to wait for a clear-cut trend, and that's something that happens a lot. It's one of my old patterns. Look at the order block. You could just take the entry over here, and then consequent entries, pullback, entry, pullback, entry. So that's absolutely something that I have to work on and work hard for it, especially for March.